Tesla earnings are out, and they weren't very good. A miss on the top and bottom lines. I guess that was to be expected for most people. The stock is holding up pretty well. Let's talk about some of the reasons why that is. And I've had several people ask me in the last couple of days, should I be buying Tesla stock at $225, $235 a share? This was almost a $500 stock early this year, so is this a buy right here? I'm going to break down the earnings and give you some understanding of why the stock is doing what it's doing, and give you both the bull case and the bear case. And I'm going to tell you if I think the stock is a buy or not right now. The headlines are really bad, and you would expect the stock to be maybe down 10%. Tesla reports 20% drop in auto revenue as first quarter results miss. In fact, the options market was implying a 9% move plus or minus, and the stock right now is flat. Now, the earnings call is just kicking off, and I'm going to update you as we go. So you've got a miss on the top and bottom lines. Automotive revenue plunged by 20%, and the stock down 41% so far this year is basically sitting there doing nothing in after hours. Earnings per share, 27 cents adjusted versus 39 cents estimated. Revenue, $19.34 billion versus $21.11 billion estimated. So total revenue slid 9% from $21.3 billion a year earlier, and automotive revenue down 20% to $14 billion from $17.4 billion in the same period last year. Now, on top of that, Tesla refrained from promising growth this year and said it will revisit our 2025 guidance in our Q2 update. This is really bad, and you would expect the stock to be lower. The shareholder deck cautioned investors. Uncertainty in the automotive and energy markets continues to increase as rapidly evolving trade policy adversely impacts the global supply chain and cost structure of Tesla and our peers. This is dynamic and changing political sentiment. This could have a meaningful near-term impact on demand for its products. On top of that, of course, Elon is in the crosshairs for being part of Doge. And there has been brand damage whether you like it or not. It's just a fact. The question is will that go away with time? Of course, you know about the widespread protests both in the United States and Europe, where Musk has actively supported Germany's far-right party. Now, a lot of bad news was kind of baked in or expected because early this month, Tesla reported a 13% decline in deliveries to 336,681. And this is blamed in part on the need to suspend production temporarily at its factories while it upgraded lines to start manufacturing a refreshed version of its popular Model Y electric SUV. And if you're a Tesla bear, you know all about the competition with China, Alphabet, Waymo. What are some of the reasons that the stock is holding up? Well, Tesla reassured investors on Tuesday that it remains on track for a pilot launch in Austin by June, and also to start building its humanoid robots, Optimus, on a pilot production line in Fremont, California this year. The press release also reiterated plans for new vehicles, including more affordable models, and that remains on track to start production the first half of 2025. Well, that's a couple months from now. These vehicles will utilize aspects of the next generation platform as well as aspects of our current platforms and be produced on the same manufacturing lines as our current vehicle lineup. This is important. Of course, Cybertruck, that was not the case, and it was very expensive. So this approach will result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in more CapEx efficient manner. This should help us fully utilize our current expected maximum capacity of 3 million vehicles, enabling more than 60% growth over 2024 production. And that's before investing in new manufacturing lines. Tesla also remains on track for the pilot launch of Robotaxi in Austin by June. I mean, it's April 22nd. This isn't far away. And this is a battle between qualitative and quantitative analysis. Bears versus bulls. And this is just, it's a cult stock. This is one of those stocks that if it were anything else, the stock would be down 10, 20% after hours. What do I mean by that? Qualitative versus quantitative analysis. Qualitative is this story. So people excited about the future, robotaxis, Optimus, humanoid robots, huge total addressable market. Tesla, without question, has one of the largest TAMs of any stock you can invest in. And you could easily make a bullish case that Tesla will be the most valuable stock in the world in 5 or 10 years. On the bear side, this isn't going to make any sense because the numbers are atrocious. And right now, the revenue is primarily coming from vehicles, which it's 20% down. So for growth investors, this is about the story. For value investors, it doesn't make sense, especially if you think this is a car company and not a tech company, not an AI company. I want you to drop a comment below and you tell me, what is Tesla? Is it a car company? Is it an AI company? And what price should this stock be at right now? So I told you I'd update you as more information comes out on the earnings call, and Musk just said that the time he spends on Doge will drop significantly next month. Now, this is critical because analysts like Dan Ives from Wedbush is saying that, hey, this is a tipping point for Tesla stock. Elon Musk has to come back and put his full attention into Tesla in these hard times. If he re-ups and stays with Doge and continues to spend his energy on that versus being the CEO of Tesla, it will have an adverse effect on the stock. So of course, with this news, the stock is now up 4.21% after hours. It's almost $250 per share. So again, guys, it goes back to if you're a long-term investor and you think about the story, the excitement for the future, it's a completely different ball game than if you're focusing on that quantitative analysis. You're looking at the PE ratios, the financials. You look at some of the numbers here on the financial summary. Total automotive revenues down 20% year over year. Gross profit down 15% year over year. Income from operations down 66%. Adjusted EBITDA down 17%. Net income to common shareholders gap down 71%. EPS negative 71%. These are big negative numbers. Now on the plus side, you have free cash flow 126%. Operating cash flow 2.2 billion. That free cash flow 0.7 billion, and a 0.4 billion increase in cash and cash reserves to $37 billion. So the company is doing just fine. It's sitting on a whole load of cash here, and there's a lot of excitement about the future of Tesla and where it could be in a couple of years and beyond. And this is also huge. So in red here, this is FSD miles on version 12 and beyond. And then in the blue, you have FSD miles on version 11 and before. So we're talking about over 3.5 billion cumulative miles driven with FSD supervised. And energy and storage are trending in the right direction. That's another reason to be bullish about the stock long term. Here's a picture of the new Model Y delivery event. This is at Gigafactory, Texas, and also the Model Y delivery event for the Gigafactory Shanghai, as well as Berlin. Tesla Diner coming soon. So when you're charging up, you have a place to grab something to eat. Tesla cheeseburger. Anyone? And you're also seeing Starlink installed at these charging stations. They want to make this a convenient stop where you can grab some food, hang out on your phone, watch some Netflix, whatever, make charging just a much simpler process, a much better experience than just sitting there. Of course, Tesla semi-trucks are also another reason to be bullish longer term. Construction progress continued in Q1. Then you either love it or hate it, but Cybertruck, Powerwall 3 ramp, 1,500 units in a single shift milestone. Mega Factory Shanghai, the first mega pack off the line. And then as I showed earlier, here's the Fremont pilot production line for Optimus, humanoid robots in your house. But there's no sugarcoating the financials, and I want to show you this really fast before I move on. We're talking about Q1 2024. This is a 21,301. These numbers are all higher. Now we're down here in this quarter, 19,335. This is total revenues in millions of dollars. If you look at net income per share of common stock, it went from 45 cents all the way up to 68, down to 13 cents. Overall, the balance sheet is in good shape, and the cash flow is strong. You're seeing a little bit less money here on net cash used in investing activities, significantly lower. So what should Tesla stock be worth right now? And do I think it's a buy at these levels? Of course, you're going to have analyst updates here over the next several days, but I want to show you the current analyst estimates. These are price targets for 12 months, also a chart, and I'll tell you what I think. Is Tesla stock a buy right now? So as of right now, you have 39 analyst ratings, 16 buy, 11 hold, and 12 sell. So it's very mixed. The highest price target is 465. Of course, we saw 488 in the end of 2024. The lowest price target is $120. Of course, Tesla is always a polarizing stock. That average price target, $296.66. About a 25% upside from here. In the post market, the stock is $249.25. You can see this S1 is about $227. The S3 is $173.12. A lot of people thought we'd go under $200 after earnings, and that was definitely possible. Again, guys, the reason this stock is holding up is people are investing in that story. But this stock could certainly see more volatility if those stories don't come to fruition. If they're promising a robotaxi event and it doesn't happen, you're going to see the stock sell off. If they're promising production of lower priced vehicles and those don't happen, you're going to see some volatility in the stock. Could it push higher from here? Of course it can. Here's where I'm at with Tesla stock. This was a focus in Fired Up Wealth in 2024. We were telling our members $175 or less DCA with with a preference below 150. Of course, the stock got down under $140 a share at $138.80. Most of our members were buying this stock heavily in that $150 level. When it got to $400 plus, we were trimming it. I did the same thing myself. I was hopeful to buy more shares back below $200, and that isn't happening right now. I rate the stock as a hold. Now, if you don't own it and you're super bullish long term, of course, DCA always works. But if you already own the stock at $170 cost basis, like most of our members do or lower, you may or may not want to be buying more shares at $250. Of course, if you're a bull, you're going to say, hey, the stock's going back to $500 overnight. If it does, hey, great. It's a win-win for me. I own shares of the stock. If there is a pullback and it comes below $200, I will add shares heavily. If it doesn't, I'm going to continue to hold the shares I have. If you're new here, make sure you subscribe to the channel, click that bell for notifications, drop a like, drop a comment. Have a great rest of your day. Take care.